Be ready. 5 seconds. Start. This may also be the cleanest and least politically influenced bull market in Indian history. In the past, run-ups in the market always kicked up a tide that lifted all boats, including people indulging being of shady characters whose political ties appeared to boost their performance. This time, however dubious, companies are hard to find among the stocks with the best performance, a trend that predated the arrival of the relatively corruption free Modi administration. In early 2009, amid the corruption that flourished under the Congress government, we started to keep an index of connected companies with known ties to politicians. Through late 2010, the index rose 180%, 60 percentage points more than the overall market. Then, as the anti corruption investigations triggered by the scandalous 2010 Commonwealth Games gained momentum, the connected companies began to falter. Their stock prices suffered big losses from late 2010 through March 2012 and have gone flat ever since, while the overall Indian market has gone on to double in value. In short, the Indian market now questions not only whether politicians and the state can deliver, but also whether political favored can deliver. The connected tycoons that flourished under the previous regime have been decimated, and since taking office in 2014, Modi has kept a new generation from rising up by bringing much more transparency to public bidding and licensing. But he is following a trend that was pressed on the government by the judiciary even before he took office. The clean quality of this bull market and its disconnect from politics is also reflected in my analysis of good and bad billionaires. Bad billionaires come from corruption prone industries like oil and real estate. Good ones come from industries like tech and healthcare that tend to be relatively free of political influence and make the most impact on productivity. In the first half of this decade, the good billionaires increased their share of total billionaire wealth in India by 22 percentage points to 53%. Of the 13 new names on India's latest billionaire list, almost all of them can be classified as good billionaires. The key to understanding where the economy and markets are headed in India is to ignore Indian politicians and follow the top 30 to 40 business leaders. Since opening to the world economy, India has continued to grow at an above average pace in part because of the advantage of growing from a very low income base here. India has the second most listed companies after China among emerging markets, and a surprising number are very high quality. If you screen the major emerging market For large, high quality companies, meaning companies with a market cap of more than $1 billion that consistently deliver both earnings growth and a return on equity in excess of 15% every year, India consistently tops the league tables. Over the past 5 years, just above 30 companies have cleared this high bar. India's selection of large quality companies is absolutely unique and the results are apparent. Over the past 5 years, 75 Indian companies with a market value of more than $1 billion have doubled in value, which is the most in any emerging stock market. Shanghai is second with 64, but in third place, South Korea is far behind with just 22. South Africa has only one. India's private companies are incredibly strong, deep, and varied by comparison with all these major rivals, which also helps explain why it tends to rise and fall with global trends. Every time a global tailwind picks up, no matter what the sector, India catches the breeze because it has so many sails up in every sector. Both the Indian stock market and the economy have steadily outperformed other emerging markets over the past 3 decades, and that basic trend should roll on for the foreseeable future. India's economy now seems to move like a vast oil slick on the global sea, for too broad, far too hard to grasp, to be contained, or even shaped by any one leader sitting in Delhi. In recent years, the three Ds of slower demographics, debt, and deglobalization have slowed growth across the world. There is not a single region that is currently growing faster than its average growth rate in the last decade. Every country needs to lower its expectations, and the least developed countries need to lower their definition of fast growth from above 7% to above 5%. The number of countries growing that fast is shrinking rapidly. As of 2010, there were 78 countries growing faster than. Now there are just 28, and India is one of them, whether you believe officially growth statistics or not. The performance is, however, not necessarily cause for political celebration. The least developed economies tend to grow fastest, and India has reflected this basic development dynamic for decades, particularly since India began opening to global trade and capital flows in the 1980s and 90s. Its economy has tended to grow about 2 percentage points faster.